more. We have Diane King Hall, host of Morning Movers, looking at some of the fundamentals when it comes to the Tesla story and what you're watching there. Good morning, Diane.
Yeah, well, I think the goal, obviously, and the way investors are starting to look at this is starting to kind of move beyond the political landscape when it comes to Tesla. But it looks like, the catalyst has been at the beginning of this week for shares starting to regain some ground. It seems that the president and Elon Musk making up, the president essentially extending an olive branch to Elon Musk, saying he wishes him well. That was in a press conference, and then Elon Musk responding on Twitter X with a couple of emojis, a heart emoji, a hugging emoji, and just indicating, that there is still some alignment between the two who had been essentially what I've dubbed first friends there. But at the same time, there you have some news about China sales, and that showing a bright spot amid some global weakness that we've been seeing in sales for Tesla. Their Model Y was the best-selling SUV in China in May, with more than 24,000 units sold. That is slightly ahead of BYD's Song Plus EV. They saw a 34% increase in month-over-month sales in China. Again, that's helped by these Model Y exports and then some strong registrations. You contrast that with Europe, which is a smaller piece of the pie for Tesla, where you've seen sales drop down 67% year over year. So it shows that China is a bright spot. The fundamentals are, though, still under some pressure. They're tracking towards a weak second quarter. North America deliveries are down 13% year over year through May. Europe across the board, not just this monthly number, down 42%. China is still lower, but May clearly indicating a rebound, Nicole. Wells Fargo projecting that Q2 deliveries will come in at a little bit more than 400,000, which would be down 7% year over year. And just warning that there could be some margin pressure here, Nicole.
Great news for Tesla, having the best SUV in China, when China is putting out all these subsidies to buy Chinese cars. And BYD has done incredibly well. But there's something about Tesla's SUV, this Model Y, as you're noting, that is the best of the best. I mean, the numbers that we have seen from Tesla recently when it came to China and Europe just haven't felt particularly great. So this is some good bright spot of news.
It is. It's a step in the right direction, but China's not letting this last long. And in terms of a cheaper model, they've launched this $15,000 sedan that's about half the price of Tesla's vehicle, and it just shows that the price, even for China car makers, it shows that the price wars are still intense over there. And even the government, Nicole, has been trying to get the Chinese car makers to kind of pull back on the price wars, but they're not stopping. BYD launching this $15,000 sedan.
Oh boy, and then I saw that McDonald's was down 6 consecutive days yesterday. Now we can make it 7 days down. That's terrible.
It is. I mean, it's going through a weak patch here for McDonald's, and this is off the back of today's pressure, off the back of a double downgrade. This from Redburn Atlantic. They've downgraded their view on McDonald's to a sell from a buy rating. They've got a new price target of $260 a share, so certainly some downside from where we are today. They think the GLP-1 weight loss drugs are an underappreciated long-term threat for Mickey D's. They think that a 1% drag on sales today could eventually build up to a 10% or more drag on sales over time. It comes, as you know, Nicole, because we've talked about this recently, the Morgan Stanley downgrade, the Loop Capital downgrade. It's just been getting hit time after time again. So really the warning about the effect of this GLP-1 drugs and the cumulative drag on sales that they see.
Yeah, I mean, it's just on top of the other ones. Not good news there. And look, over a time, it's not doing well. You can look 3 months, 6 months, whatever. Over 1 year, it's still a winner. It's up 15%. But of late, it's been bopping around and slightly negative. Let's talk about, last but not least, Smucker's, which is down 7% today.
Yeah, which takes it lower for the year, this move. And it comes off the back of a miss on revenue. They reported a mixed bag for their trailing quarter, and then investors are also worried about the guidance for Smucker. So on their trailing quarter, they reported adjusted EPS of $2.31 a share. The street was looking for $2.24, so that was actually a beat, but revenue came up light at $2.14 billion. The street was looking for $2.18 billion. And then in terms of where you saw their segment performance, it was just uneven. You saw there was a strong performance in coffee. That was up double digits. International up as well, but frozen and spreads, that was flat. Sweet baked snacks, that was sales in that segment were down 26%. And then they even have a pet food segment that was also down. That was down 13%. The biggest drag, again, was the sweet baked snacks. That includes Hostess. So they saw comparable sales drop there, profits fell there, and then the outlook is just disappointing. They're projecting EPS for the year between $8.50 to $9.50 for fiscal 2026. That's well below what the street is looking for. The street is looking for more than $10, $10.28 to be precise. Revenue expected to come in between an increase of between 2 to 4%. And if you compare that to how they did last year, where they saw revenue growth of 7%, so significantly down from there. A few of the issues that they see, they cited tariffs, they cited inflation, they cited record high coffee costs. So those are some of the pressures. And they also cited, and we were wondering if this would happen, Nicole, consumer trade down.
All right. Well, you know, as we look at this, they do note that the price of their coffee inflation is hitting them, and they had a price increase in May, which they already took that, and that they are planning another price increase in August. Yeah. And at least they have some pricing power, unlike when you were talking about McDonald's, one of the analysts of those many that you listed, I saw that they didn't have the same pricing power. At least they have some pricing power to be able to do this, but they are facing higher costs.
Yeah, and look, and before today's move, the stock was higher year to date, so it's some pressure that they're facing today. And I think the view was, especially for those who are in the, you know, kind of more constructive camp, that because if consumers are eating away from home less, then that would benefit a Smucker's. But now Smucker's calling out, you know, the consumer trade down behavior. Are they going with like a no-name kind of label, right? Or private label, as the companies call it, and trading away from Smucker's for the, you know, store brand, whatever that is. So that's some of the competitive threat that they have to deal with, Nicole.
All right. Good to see you, Diane King Hall. Good Tesla, McDonald's, and Smucker's.